All right, now major economies globally continue to battle surging inflation. The UK has reported consumer price inflation at a 40-year high. In fact, it rose into the double digits. UK's CPI rose 10.1%. And this is despite significant action that has already been conducted by the Bank of England on the policy side. You have the central bank, which has also predicted, remember, that the UK will slide into recession in the fourth quarter of the current year. Rising food and energy prices continue to haunt households in that market. And across the ocean, you have US retail sales that came in flat. That's the latest data, of course. And let's in fact also pull up where the Dow has opened up, and it's opened in the red today with cuts of about 0.5% pressure on the economy. Very clearly something that is being focused on by traders and investors in trade today. But David Madden, market analyst at Equiti Capital, is joining in to give us some perspective on the UK and, of course, the broader picture in the European markets as well as in the US. This seems to be a bit of a backbreaker, if you talk about it, right? David, the double-digit inflation in the UK, where you're talking about an almost guaranteed recession, twin blows?
Twin blows indeed, but given the price action of the British pound today, you wouldn't really think that we had such actually quite depressing news, to be perfectly honest. Although the British pound is lower against the US dollar, mostly down to dollar strength, the British pound is gaining against most currencies. Today's news was indeed depressing, but it wasn't entirely unexpected. A few weeks ago, we heard from the governor of the Bank of England, Andrew Bailey, who predicted the UK economy would enter recession at the back end of this year, which would probably last for most of, if not all of next year. Mr. Bailey also talked about the possibility of inflation, CPI heading up to over 13%. So today's numbers were a shock, but they weren't a complete shock. It is worth pointing out, though, that the latest UK CPI rating of 10.1% even topped analyst forecasts. Economists are projecting a reading of 9.8, so it's even higher than the already lofty expectations that economists had. I must reiterate, though, that we're not really seeing a huge sell-off in the British pound yet. But when you have a prolonged period of inflation, and if inflation continues to remain at a double-digit level in the UK, at some point that's going to bite. At some point we're going to see consumer activity taper off, and in turn, a further decline in sales activity, in construction activity, and manufacturing activity. I think in relation to when will the UK economy slide downhill and possibly in turn the British pound, I think it's a case of when rather than if.
The question then, specifically with the UK, is that the central bank has already raised policy rates multiple times. There seems to be limited room on the monetary policy side. The traditional response in this situation of a slowing economy has been to bolster it on the monetary side. But then, would you say that the only action available now is on the fiscal side?
I would say there isn't much wiggle room left on the monetary side. As you mentioned, we've had multiple hikes. It's 6 hikes since December last year, and in the most recent update, the Bank of England, as I mentioned, raised their inflation forecast. So it was kind of almost like begging the question, why are you hiking rates if you're essentially admitting that your own actions and your own capabilities aren't really going to get a handle on inflation, because a lot of these factors are beyond the control of the Bank of England. Rising food prices, higher energy prices, and the likes. There's a lot of talk about a cost of living crisis, and there's currently a leadership election for the next Prime Minister of the UK. That is an absolutely red hot topic. And in relation to the fiscal response, there's talk of basically tax cuts as a way of actually giving workers and consumers more money, leaving them with more money at the end of the month. But there's also talk about essentially subsidies in relation for heating as the winter months come ahead. I think we'll see some sort of fiscal action needed and will be delivered in the weeks and months ahead. But it won't be to the early September before we know who the next British Prime Minister is and what their policy will be.
And David, thanks so much for giving us a little perspective. Thanks so much for joining in.